Hello and welcome to My Finance Teacher on YouTube. Let's have a look at gold, and we're going to talk about what the future holds for gold over the short term. And today is 30th of January 2017. Since second half of December, I'm sure all of you know we have been experiencing a nice upward trend in gold. However, over the last few days, over the last week or so, this upward trend has stopped and the gold price has been moving down. The point at which this upward trend stopped does make sense somewhat, as the rally since December last year has allowed gold to retrace around 38% of its decline since the top of the previous intermediate cycle. By the way, on the chart in front of you, you can see a daily price of gold over the last few months, and the blue line is the 20-day moving average. So since the top of the previous intermediate cycle, which was in July last year, around the price level of 1376, the price has dropped to the previous low of around 1123, and the recent rally since December last year has allowed the gold price to retrace around 38% of this drop. And as we have mentioned in the previous videos, 38% Fibonacci retracement is often either a support or resistance zone. So this recent decline in the gold price over the last week or a few days has allowed the price to cool down somewhat and come back to its 20-day moving average, whereas previously it had been somewhat stretched over the 20-day moving average, which is also indicated by this relative strength index at the top of your screen, which was about a week ago at overbought levels. So this recent decline in the gold price has allowed us to cool down from those overbought levels. Currently we're at neutral levels on RSI, on the relative strength index. And what do we expect? How do we expect the gold to behave over the next short term? Well, if we look at the advancing phase of the previous intermediate cycle, since around end of May until mid of July last year, we will see that during the advancing phase of that intermediate cycle, price sometimes did retrace back down to the 20-day moving average, and often dipped a little bit below that. So we might expect a similar behavior this time. So I expect the price to maybe continue down for another 2 days, 2-3 days, not much more than that. And after that, I expect the price to continue its upward trend, since we are at the advancing stage of the new intermediate cycle that started during the second half of December last year. So another point that supports this idea is again Fibonacci retracement numbers. .38% Fibonacci retracement might be achieved quite soon with this recent drop in gold price. In this case, we are retracing around 38% of the recent rally, which again in this case might prove to be a support zone for the price, after which we might expect the price to continue its upward trend, gold to continue its upward trend. How far might gold continue its upward trend over the next couple of months? Well, one of the interesting things to look at here is the 200-day moving average, which is around the level of around the level of 1270. Price most likely is going to achieve that level and go beyond that over the course of this advancing stage of the intermediate cycle. Another indicator to look at is this line that connects the tops during this declining phase of the previous intermediate cycle, which also indicates the prices around 1270 or so. So there is a good suggestion, good indication that this level of around 1270 or so should be broken before this intermediate cycle tops. Additionally, if we look at the chart of dollar, which has experienced an advancing phase of this intermediate cycle since about early May last year, it is time for dollar to start its declining phase of this intermediate cycle, which it probably has started over the last few days, over the last week or so. And if that continues for another few weeks, it is going to help gold to achieve the levels probably somewhat higher than 1270, might be considerably higher. If we look at the previous intermediate cycle, the advancing phase of this intermediate cycle allowed the gold price to increase from around 1180 to 1372 or so. That is a 15% increase. If the same percentage applies to the current intermediate cycle, then price is expected to top at around 1293 per ounce of gold. So there is still good potential left within this intermediate cycle, although over the next few days we still might expect gold to continue its short-term downward trend. However, there is no reason to panic about that. Remember, this is not investment advice. However, I wish you luck.